Hi everyone, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. First and foremost, I hope that you have all had a good holiday season, even if social distancing may, like our household, necessitated having a very quiet Christmas dinner with just the two of us, and an equally quiet Christmas holiday season. As I thought the last time that we met, not much happened in the first 2 weeks. It's only been this week that the fireworks went off. With the election finally being put to bed, control of the Senate passing to the Democrats, and the stock market breaking out to new highs. In particular, I want to observe that the S&P 500 actually broke out over its super growth price, that's 3.5 times adjusted book value, and may, and I emphasize may, be headed higher and perhaps by a good amount. I might look for a pullback after this breakout, of course, but with all the stimulus now in evidence, plus with the Democrats in charge, much more is likely to come. The end of the post-March 2020 rally/bull market may not yet appear to be in sight. Indeed, the new decade appears to be bringing new market leadership. And what I now find to be of considerable interest is that the FANGs are not leading the charge higher, as we shall see momentarily. So, first, before we look at the FANGs, thanks to everyone who likes this video and all our subscribers. I appreciate your help with the YouTube algorithm, as this allows us to bring you more and better content, so thank you for that. Second, thanks for everyone who signed up for our SVA introductory webinar this past Wednesday. I hope that you enjoyed it and that it tickled your interest in the actual SVA methodology. If you want to watch a recording of it, by the way, you can click the link in the description. Finally, next Monday, next week, at 12 noon, I will be appearing on the BNN Bloomberg Market Call for those of you who would like to tune in to our market outlook, and of course any and all stocks of interest that will be raised. Anyway, let's cut to the chase and take a look at what did happen since we last met and consider what you should be looking for in the period ahead. First and foremost, however, take a close look at each of the FANG stocks and observe where they are relative to their recent high valuations. Not a single one has broken out to a new high, as the Standard & Poor's has done. Like the Sherlock Holmes story, the curious incident of the dog in the night. Why aren't the dogs barking? Indeed, why are they acting like market dogs? Well, let's take a look. The first stock that I'll discuss is Amazon, and of course that is in my quote-unquote buy portfolio, if you like, my hypothetical portfolio. Despite that, the stock has done almost nothing at all, just moves dead sideways. The second stock that would be in my hypothetical portfolio would be Apple, and for those of you who are new to FANG Friday, you may wonder, how on earth did we manage to get in there? Well, if we went back to August of 2020, we would find that that spike there at the peak actually occurred at the old HB5 price, and that the bottom occurred at the old HB4 price. That was before the effect of the stock buybacks cut in. As I have no particular reason to do anything except hold the stock, since it was purchased around the $105 level and has done decently well ever since, I would continue to do so. However, with no signal in evidence and between two breakpoints, there is nothing new that I would do with Apple right now. NVIDIA just continues to be increasingly sloppy. And quite frankly, remember the last time I said I really didn't care for the stock very much, and I still don't, despite, by the way, apparently good fundamentals for the industry. So I am going to remove it from my hypothetical portfolio. Now, here is an interesting stock, Facebook. Remember, some time ago we had a nice sell on the stock when it reached its bubble price, that's 7.4 times book value. The stock had rallied, and I kept saying, wait for it, be patient. And patience has paid off. The stock has finally dropped almost to its mid-super growth price. That's 5.5 times book value. And here I would buy the stock for at least a trade. Alphabet, on the other hand, of course, like Facebook, some months ago has just hit its peak and is now rolling over. Again, between two breakpoints, and possibly having come off its peak, I would do nothing about this stock. I would exhibit a lot of patience right now, as we did successfully with Facebook. Microsoft continues to bumble just south of its HB2, and quite frankly, I have not liked the stock for some while. It's gone nowhere and done nothing, and I would continue to avoid it unless it can pick up some strength and break out over the HB2. Finally, Netflix. Again, Netflix, kind of the COVID-19 stock, continues to go nowhere. I have said for some while I don't like the stock, and I still don't. I would not be touching the stock at the present time unless or until I get some kind of a confirmed signal, either a drop to the HB3 or a breakout over the HB4 price. Now, in summary, what I call my FANG portfolio, I would still own Amazon, following our buy on Monday, November the 2nd, almost at its HB3, although I don't see any follow-through. If I was thinking of buying, I would be patient and wait for the HB3 price to appear. But remember, that HB3 price must hold if the stock drops there. Apple would be my second holding. The last SVA signal was a buy at the old HB4, which of course, unfortunately, you can't see anymore due to share buybacks. However, if I were looking to buy, I have no clear signal and would do nothing right now. My third holding was NVIDIA. It is so weak in the face of what appears to be good fundamentals that I'm going to take my money off the table here. Maybe it can break back across its HB4, that's 20 times book value, and I would take a position if it did, but not until then. Now, a ray of optimism. Facebook is nearly down to its MSG price. That's 5.5 times book. Patience has paid off, as it often does with SVA signals. I would buy at this level for a trade, although I would sell it if it fails to hold. Stocks that I personally would not hold at the moment. The first one, of course, is Alphabet. When Facebook was rolling over, we waited for some semblance of a bottom to materialize, and it has. This is the time to be patient once again. Microsoft, if I was thinking of buying, I would need a clean breakout over the HB2 and a check back. The technicians sort of breakout pullback, and it holds up. In its absence, I can wait, and I think so should you. Netflix is a real COVID-19 stock, but of late we are seeing sloppy trading, which often leads to lower prices. Competition is really heating up in this industry, with AT&T even giving away a free iPhone if you sign up for their streaming service. If I were looking to enter this stock, I would definitely wait for a decline to the HB3 and hope for a rebound, or a breakout over the HB4, which I kind of doubt. I'll say it again one more time. This is a time for patience. Anyway, this has been Ross Healy, the chairman of Strategic Analysis and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools, as I trust you have been very clearly seeing. If I don't see you on Monday, I'll see you next Friday. Have a good week.